Hello and welcome to the ISE ETF and Index Outlook for August 13th, 2012. This is Patrick Sresna. As always, we start off with a chart of the S&P 500 using that spider exchange rate fund symbol SPY. We are now over 2 months off of the May-June bottom and have now seen the market progress all the way back up to its previous highs. We are now at a very important, crucial crossroads in the market. There's a lot of big picture market corrections that always come back to retest their highs only to trade back down to their lows. In order for the bulls to really establish that that a bottom is in, they would have to make substantial progress through this overhead resistance level. And right now we're seeing a lot of distribution coming in at this level, and even though there hasn't been any waves of selling, this is going to be a point where the market is going to decide what is in store for us into the fall. It would if a rejection off of these previous highs really does open the scenario that the market could trade all the way back down to the lows of the year in a very what will be defined as a very sideways consolidated market to define the 2012 year. In the same regard, any progress that breaks to a higher high, let's say we see a rally up to, let's say, the 150 level, and then subsequently all sell-offs are contained to the 136 to 140 level on pullbacks. That would establish a very bullish environment for a very big year-end rally. And so the way that the market behaves off of this level will define a lot. One way or another, we at this juncture do believe that the risk-reward proposition of being long the market has a poor payoff. Ultimately, there's a lot of things that can go wrong off these levels, and not enough upside potential to compensate for it. So at this stage, even though there is room for the market to advance and not necessarily begin selling immediately, there's also that marginal benefit of being in the market. Next here, I want to take a look at the ISE Cloud Computing Index, which is a symbol CPQ. A chart here of the ETF of it, the SKYY. We've seen the ETF trade back up toward its previous highs around this 19 level. We're trading into this overhead resistance level at the same time as the markets are reaching some substantial overhead resistance levels. While we want to try to start looking optimistically on this index, this is again overhead resistance. That if the market was to go through some sort of a corrective phase off of these highs, it would be very natural for the cloud computing index to follow suit, because there hasn't been a substantial or established rally in this ETF. It is quite possible that there is still yet going to be a retest of the lows during a corrective phase, but we are starting to look at the possibilities that that 17 level is where the lows of the year are going to be established. Next here, I want to take a look at the ISE Natural Gas Index, which is a symbol FUM, and we basically now have a natural gas index that broke above its July highs and made 2 peaks up there, and now is broken to a higher high. There's this 105 level right up above, kind of lines up with all of the lows that came in December and January, but as well there's the highs that came in May that we could see even as high as 108, 109, 110 on the upside. Really at this stage there is room for the natural gas index to potentially get as much as $2 to even $5 on the upside, but then we'd be looking for overhead resistance to begin a corrective phase, so trade higher with 1 foot out the exit door. Finally, I want to take a look at the ISE Global Platinum Index, which is symbol ORE. Now, the Platinum Index has gone through substantial deterioration and continues to be relatively weak, but what we've definitely seen now is that this market has stopped declining at the same rate of which it was earlier in the year during that February to May sell-off. Whenever you see the sellers lose momentum like this, it's usually an indication that a bottom can be banged out somewhere here. While we certainly do not have any technical evidence yet that a bottom is officially in, and nor do we want to officially be banging the table for a buy now opportunity, we are certainly paying attention to whether or not platinum index will bang out its bottoms here. If it does, then we're seeing a market that was so extremely oversold that at some point after a basing and then bottoming formation may represent a very good risk reward proposition for trading back up to retracement levels even as high as 80 to 90 on the upside. But that would be something that we'd be targeting near the end of the year and not necessarily something that we're very interested in right here in August. That was your ISE ETF Index Outlook. Thank you for joining us.